In Big Ideas, we describe this by using the term revolutions. There are 3 revolutions taking place simultaneously right now. One is a money revolution. One is a financial services revolution. And one is a next generation internet revolution. So on the money revolution, Bitcoin and Ether to some extent, but Bitcoin, surely it is the most secure network out there, is the first, and each one of these words is really important. The first global, private, decentralized monetary system ever invented. And it is going to have profound ramifications. Just ask the people in El Salvador. And recently, President Bukele of El Salvador had a conversation with President Erdogan of Turkey because they are going through a currency crisis. And so I think the emerging markets are going to adopt this kind of monetary system increasingly because their own monetary systems, very dependent often on the dollar or on the euro or someone else who does not control the population. They would prefer not to be dependent on politicians. This doesn't involve politicians. So that's the monetary revolution. And we think that it's going to proliferate faster. Emerging markets are very interested, except for China, of course. They're interested in making the digital yuan the reserve currency of Asia. The second revolution is in the financial services industry. We do believe that DeFi, decentralized finance, is going to usurp the role of most financial services companies today. Most financial services companies are middlemen, and DeFi takes the middlemen out of the equation. You know, in the early days, some of your viewers may know of Lending Club, and it took some middlemen out of the equation, was able to offer higher rates to savers and lower rates to borrowers, and became very, very popular very quickly. Well, put that on steroids. That's what we have going on in DeFi. And again, it's a global movement. All of these are global. They are not, they're not being governed by any particular nationality. Now, regulators are now turning their sight. My observation is that regulators want to protect the little guy, the average investor. That's their mandate, and that's good. Prevent frauds and other such things. But regulators want to encourage innovation, so I think putting guardrails around is going to be a good thing for everyone. You know, with the way the electrical grid is evolving, we could see Bitcoin mining become a part of that infrastructure. Here in St. Petersburg, for example, you know, we fill up our energy storage units quite easily because it's so sunny here. The overflow could go to Bitcoin mining, which would accelerate the shift towards renewables because the whole ecosystem will become so much more profitable over time. Well, I think China banning mining was very helpful in that regard. And so the U.S. was the biggest beneficiary of that. I think 34 or 5% of the mining now is taking place here in the United States. And Kazakhstan also. So we're seeing people like Elon Musk and Jack Dorsey, who both care an awful lot about the environment, trying to figure this problem out. And in fact, what I just mentioned about Bitcoin becoming a part of Bitcoin mining, becoming a part of a utility ecosystem, came out of research that we at ARC had done, led by Brett Winton, our director of research, and Yassine Elmandra, who's our lead crypto analyst. Working with Square, we were able to dimension how much that solar and wind would proliferate, how much faster it would proliferate with Bitcoin mining as a part of the ecosystem, as opposed to without it. That research is starting to bear fruit. We're seeing utility ecosystems, they're getting the plot and they're looking for profit. And in the meantime, or in the process, they will be accelerating the shift towards renewables. ironically, given the way people talk about Bitcoin. In a broad sense, we have never been like this moment in history in terms of the amount of change that is it's already started. We feel the ground, as you just said, shifting underneath us. It has already started. 5 major innovation platforms evolving at the same time. You have to go back to the early 1900s to see anything like it. You had 3 platforms then. You had telephone, electricity, and automobile. Today you have DNA sequencing. You heard it on the conference, DNA sequencing, robotics, energy storage, artificial intelligence, blockchain technologies. All of them are in exponential growth trajectories, and they are converging with one another in massively important ways and profound ways. And they're going to deliver, we believe, if you just take a look at the technologies themselves, over the next 10 years, we believe the market cap associated with these 5 platforms and the 14 underlying technologies is going to scale at a 30% compound annual rate of return. These are astonishing rates of return. It is going to change for 2 reasons, beyond the environmental concerns. One, the technologies are ready. The kind of battery technology, artificial intelligence, and robotics. Those 3, actually, that's a convergence taking place in the transportation field, whether you're talking about autonomous vehicles ultimately, or drones for parcels or food delivery and so forth. So yes, you're absolutely right. These worlds are, the digital and the physical world finally are converging because the technology is ready, and just as important, the costs are low enough. The costs were prohibitively high before, especially when it came to electric vehicle sort of battery technology. But thanks to Elon Musk, and I would say also to the Chinese, who are moving very quickly in this direction, that is no longer true. In fact, the total cost of ownership of an electric vehicle, most people don't know this, is lower today than that for a gas-powered vehicle. Most people just look at the sticker price, and we think in 2 years, that they will be the same price. And then a few years after that, we believe that electric vehicles will be 30% plus lower in price. So these cost declines continue in emerging technologies, whereas the internal combustion engine is a very mature technology. What we've seen already in the short life of the blockchain world is booms and busts. We are very early. And when you're early into a new technology, this is not only a monetary system, but it's really a new technology, a new platform. In the early days, expect booms and busts. And what I analyze as we're going through the bust side of that roller coaster is how fragile or anti-fragile the ecosystem is. For example, May a year ago, we went through a crash. I mean, Bitcoin it would be considered a crash. Right. Bitcoin was cut in half, and other crypto assets were cut by more than that. And I was fascinated to watch the DeFi ecosystem through all of that, because what I thought was going on was there was a lot of leverage. When you talk about speculation and mania, what happens is speculators are taking on leverage in order to capitalize on this boom. They don't even understand what it is. Some of the later ones getting in, they just know that their friend said, no, you got to get in. It's been going up. And then you have a crash and a shakeout. Last May, when that happened to DeFi, I thought that was a very important moment for DeFi. Not maybe NFTs yet, but DeFi and for Bitcoin, because the DeFi ecosystem did not skip a beat. There were millions of people wiped out because they had taken on leverage. All they were doing was speculating. And yet the smart contract to operating system effectively didn't skip a beat. It did not break down. That was very important. You're going to see some of these blockchains flame out over time. So we are in the process of natural selection when it comes to these ecosystems. So fully expect there to be booms and busts.